I'm Eric Birch with MiningClips.com, and we're at the PDAC Mining Convention in Toronto, and I'm speaking with Brien Lundin from the Gold Newsletter. Welcome, Brien.
Great to be here.
We've had some very interesting market developments over the last couple of months here. February was just horrible, and we saw oil prices dip below $30 a barrel, and that triggered something very interesting. It triggered that flight to safety in gold, and all of a sudden gold started rising day after day. What's your take on that?
Well, my take on that, at least the first couple of months of this rally, was not that it was as much of a classic flight to safety from some kind of financial duress or potential catastrophe, but more of a monetary issue, a longer-term issue, a concern that with 1/4 of the developed world operating in a negative interest rate environment right now, that was actually going to translate into the United States. If the U.S. were to have an economic slowdown, the only thing left for the Fed to do would be actually to go negative or more quantitative easing. So I think that was really driving the market for the first couple of months. Right now, I see that the economic data coming in isn't really as supportive of that thesis that the U.S. economy is slowing down, yet gold is still going higher. So there's some interesting things at play, in my view, that are a bit different than the first, say, couple of months of this rally.
Right, and with regard to the U.S. economy's strength right now, we did see an unexpected jump in job numbers last week. However, the average wage is lower than it was before. So these aren't premium jobs that people are going to retire on.
The jobs number had some negatives hidden inside of it, but still it was a real upside surprise, kind of a blowout upside surprise that was on its face extremely bearish for gold. Now what's interesting is that gold dropped $10 immediately, yet over the next very short while, that same day, it leaped up another $19, which gets to where to my thesis that there's something going on in the gold market right now that's kind of different. Over the last couple of weeks, we've seen the market very strong in the New York trading session, whereas over the past 3 to 4 years, it has been, say, strong in Asia and really gets clobbered in New York. So somebody in New York is buying gold really quite aggressively and virtually regardless of what the economic data or the daily headlines might indicate. So I think there's kind of a thematic play going on with some big hedge funds or whatever in the gold market.
Right, and actually I noticed that on days where we had some strength in the U.S. dollar, usually we have weakness in gold, but we've had gold moving in tandem with the U.S. dollar recently as well.
Yeah, there are a couple of tests for a really long-term, secular, monetary-based bull market in gold. One is that it has to rise in terms of all currencies, in addition, including the dollar, which it's doing right now. The other is that silver has to confirm that move, which it hasn't been until very recently, and we're just starting to see that happen. So I think that it's really showing the signs of a longer term, a really major upswing in gold, but I'm still a bit skeptical given the history of the past few years. It still has to go a bit further to really prove it to me.
Excellent. Well, Brien, thank you very much for joining us today, and we'll try and catch up with you a little later in the year and see where we're at.
Looking forward to it.
Thanks.
Thank you.
I'm Eric Birch for MiningClips.com.